Hey, thanks for checking out this Prep Weekly midweek market update on October 6, 2015. Pause the screen, read thoroughly. The information contained herein does not constitute investment advice, should not be used as the basis for investment decision. In order to obtain investment advice, contact a registered investment advisor. FinPrep and its affiliated parties should not be held liable for any investment decisions that you choose to make. The material contained in this presentation is for informational and educational purposes only. So what an interesting week here for the SPY. Well, week and a half almost. As we last talked, we gave out this 187.50 level as a potential inflection point for free on last week's video, so that was pretty awesome to see that. Bit of a pierce, but still played out quite well, and that was simply based on the observation of where this opening and these closes on that major and kind of the end of the correction coincided. So pretty darn amazing to see just simple observations off the price chart play out accordingly. So having that in mind, round number resistance at 2,000 approximately, 2,000 on the S&P 500, right? But 200 on the SPY, which is the ETF, which more or less tracks it. So very strong rally on Friday and managed to get in this area, but still looking for now a potential inflection point around this area, assuming 200 is able to be taken out, let's say for the rest of the week or perhaps in the next week. We would still look for some resistance. There's just a confluence of trend lines which are coming in above price, so it shouldn't be the straight, well, one wouldn't think it would be the straight shot that it has, especially with the massive gap up on Monday. So 201 is a pretty significant level, right? And this is the trend line that marked the exact top on that Fed day spike at 203. But that puts it down at 201 as time is eclipsed, so right, the slope of the line. There's also the declining 50 at 202.5. And then, of course, your 205s for your longer term 250, and then your longer term price resistance, former support. To the rallies back here. So, but yeah, really looking this week to potentially see what happens at 200, 201, and very extreme case would be 202.50-ish on that declining 50 for a retest of this gap fill down at 195, and then just popping back into the general range of 187.5 to arguably 183 at the ultimate lows of that correction as an outside case into that 200 to 203-ish level. So that's kind of what we're looking at. So again, very important lesson here, and it's one we all have to learn, unfortunately, sometimes through experiences, not to get emotional at these ranges. So the propensity is to get bearish down here and thinking, okay, gosh, we're going to break to new lows, and then conversely up here to start assuming that essentially, okay, happy days are here again and so forth, because the way the chops and trading ranges work is, they kind of play out as you think. So a trading range, you sell, price sells off at the top, and then pops at the bottom, sells off at the top, pops at the bottom, and so forth. So if we are continuing to be within the trading range, well, that argues for a potential bit of more of an upside to then a resumption of a downward price action to retest at least the lows here. So that's what's going on, as well as please be aware of one thing: the stochastics, fast stochastics, the 14.3 have been moved down here, and I kind of have, we'll just call it ultra fast stochastics here, the 5 and the 3. So on the ultra fast stochastics, we're looking at overbought, which kind of makes sense given how fast this move up was from Friday, and then now here on Tuesday, closing actually a bit red. Dow, on the other hand, was one of the major indices that actually didn't close red today, but did take out that 166 pretty handily. It did take a bit of 4 or 5 tries midday there on Monday, but did manage to close above, and a bit of a sell-off here, actually, kind of closing at or near where it opened on Monday. So remains to be seen how much more legs this has in it. Again, going to be same general story for all these guys, really, of being overbought on the ultra fast stochastic, and then your declining 50 barreling down on you. So whether or not this move above major trend support holds, or what would have been resistance holds, remains to be seen. So looking for a potential, maybe at most a touch of the 50, otherwise a potential rollover again back to gap fill at a bare minimum, kind of for a downside scenario. In terms of NASDAQ Qs, so managed to reclaim the price range. It's going to be similar to everything else. However, it's within the price pattern and actually managed to hold above the kind of squiggly 20 daily moving average, but cap below the longer term 250 daily moving average for now. So an upside case for the week would still put you in around the 106.50 unless you get a breakout, of course, but otherwise, if the channel remains in effect, you would still get your move in here, and then for resumption downwards, and then have, if it would break out at this price range, then obviously calling into question the 98 level we discussed on the last video, and more importantly the 100.5 level. Check that out. It worked out beautifully as far as for intraday rallies. I mean, it marked the exact low for the 3 days. What was that? Wednesday, Thursday, and then Friday. So 3 taps on the 150 level we discussed for free here. FinPrep Weekly Market Update last week played out like a champ and actually served as kind of a nice little platform for this extended move upwards. But remains, obviously in these trading ranges, one doesn't get, dogmatic with respect to direction. It's more about pivoting when the market pivots in terms of one's short-term outlook, okay? In terms of the trannies, basically, we ended up getting that a bit of more fill-in in this area as discussed as a potential outcome on the prior video, and then capped at the 50-day moving average, only to be rejected here and selling off back into the kind of range, or what was kind of the breakout of this more significant longer-term downward price channel, which began in March, which gave us a heads up of, hey, things aren't all rosy as we were being led to believe in the headline indices, right? Check out the first video for that. So that's the trannies. They're going to be more or less the same story, so a little bit more choppy though. So small caps, Russell didn't. So the surprising breakdown on Friday of this fairly significant longer-term trend line we discussed, showing me back, I think it was back to 2013 tops and so forth. Let me just confirm. Yeah, 2014 tops. So it's a pretty long-term trend line to have been just pierced through, but then did manage to gap up on the Monday and actually close above, but still being capped low again, this kind of squiggly-ish 20-day moving average. Amazing how that caps the close as well as holds the open there. So we'll see what happens with the rest of the week for Russell. If we get weakness across the tape, it wouldn't be surprising, obviously, to see it break out of the range again. On the other hand, if upside persists, then perhaps a move back in. Probably not even all the way up to the top of the trendline support, but something to that effect. More so for the next week. The other piece of interesting price action, which wasn't clear, right? So what we had was the breakdown in the rather significant sell-off that is in the BIOTECHS here, where we left off. So we got a little bit more of resumption on that in the beginning of the week, only to rally right back into that 320 area, a little bit higher. But in percentage terms, that was pretty doggone good call that we gave out. And check it out on the weekly, same data. These are just weekly bar charts of all those price bars, which were daily. And then capping it just beautifully at that. It was 325 there as the slope continued as we added a new week. But that zone played out perfectly for, again, the anticipated sort of relief rally and then just the dump. So here's Tuesday's action. So we'll see actually a good little bid right off the lows, closing in at the 301. But should the downside persist, it would clearly open up the door for this kind of zone where you have these 3 bottoms in this 284, 286-ish area on the BIOTECHS. And again, that's where emotions will be heightened. Perhaps we will break through, but perhaps that's just stages the next kind of micro bounce, and then direction to be determined from there. So interesting stuff. So being on our toes in 2015, not getting too committed to any one direction, because these are very whippy charts, as you could tell. So Treasury's got a nice gap up, very strong, surprising gap up on, was that Monday? No, it was Friday. Only to push a bit higher and then reverse and close below the open. Still green because it was above the prior candle's close, but that bit of reversal combined with it couldn't close above the 200 kind of presaged this move down here. Having said that, it looks like it's potentially getting ready to find potential support at at these rising 20 and 50 DMAs at 120, 180-ish, 122-ish zone. So if that doesn't hold, well then obviously it kind of opens up the question of how low does it eventually retest price channel. But it would seem that this is a pretty supportive zone for price should this push continue up. So having taken out, right, at least on that intraday basis for one day, this prior resistance line extending back to June. Stochastics, the ultra-fast stochastics are getting a bit oversold, but can't quite really say we're there yet on the fast stochastics. In terms of dollar, still being capped at that now slightly declining 50-day moving average, as we discussed, so kind of containing price in there. So that opens the door, obviously, for a retest of this rising 250-day moving average, as well as this arguably quadruple or triple, at least, because you had this fake-out fun candle there. But triple-ish bottom, I don't want to say bottom, but bottom of a range, right? So 124.5 for a potential bounce, or does it break down? And then the top of the range, as we already discussed in prior videos, is 25. Let's call it 75-ish. Okay. Not being too dogmatic with our prices, but so that bit of a breakdown in dollar, actually so interesting how we were concerned about the silver chart, had that nice little gap down on Tuesday, came back in. Remember we discussed the 3 taps on this line prior to the capitulative kind of drop. So we had the 1 tap, boom, Tuesday morning gap down, comebacks into gap fill and trend line resistance. Monday, and just for old time's sake, Monday morning gap down. Pretty big move, needless to say, but actually could connect the trend line off the lows from that Tuesday gap down in this bar, and you get right where she closed and opened. So pretty amazing. So she began to move sideways in kind of a volatile pattern, and then taking this silver rocket to the moon. So you notice she does this right on occasion, especially in this kind of beat down the period where you get these massive bull runs, I guess you'd call it, or short. I don't even know if you'd call it short squeezes, but it's massive, like 3 to 4 day runs, boom, 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 only to get slammed down, slammed down, slammed down. But interesting, the amount of time it takes to get down is actually quite less than the amount of time it takes to rise, which is somewhat different to other asset classes. So always fun watching the old girl silver there, because she's a bit crazy. So it's definitely sold off quite hard off the 250, as we discussed, as a potential fake out zone target. So looking at the weekly, I mean, one could think that perhaps, as in this prior episode or flare up back in July of 2014, could it get all the way up to the 50-week moving average, which, gosh, would put you another $1 up in and around this zone. But let's see. Nice long wicker, argues for potential continued resumption of selling. So it remains to be seen, but let's watch silver, but not get caught up in the craziness of the emotion. What would have happened if you did that here? If you did that here, thinking that the run's going to continue if you did that here, right? Not to say that this has to play out in exact repetition of history, but history is a guide. Use it or not, it's up to you. But that's one of the basically underlying fundamental premises of technical analysis. So USO oil, we read you the flag, obviously, as you could tell. So took out the flags, you had too many chops around them, just kind of made it now a symmetrical kind of sideways consolidation pattern at 1420-ish, and then a bit below 16. So price now at the top of the trading range. So again, nice little gap up above, and then a good run today here. But keeping our emotions in check, because this is when people could potentially get ultra bullish, start putting on some bets that end up being reckless in the event of a potential retest of the lower sideways consolidation trading range. But always on alert for potential breakouts. Yes, it was pretty decent little volume on the up move, but you can't rule anything out, especially with the sort of lack of direction. And again, sort of a flag, this short squeeze off the lows, not classically in textbook land, at least a bottoming pattern. So just something to bear in mind as potential, giving us heads up in the back of our mind. Let's see, only a few more, guys. Taking a look at China, just chopping around here at this very significant trendline support, as we discussed. So actually, on the weekly bar here, the 200 and the 250 week moving average in and around that 38-ish area coincides quite well with the declining 50 daily moving average. So even any potential strength, that's a pretty big zone in and around here. So if she fails to make subsequent closes above that, it argues for a potential downside scenario. Having said that, though, the 20 is kind of trying to pop its way back up. It is, flattening out and then arguably curving up. So remains indeterminate, but still a key zone in our view here for China, but taking its time. Junk bonds, actually resumption of the sell-off, and you got nice 1-2 push up, and then do we get another resumption of a push up into this former trend line, which held as support, and through prior moves we already looked at, breakdown, and then support here, and then now does this become resistance? So 36, and then flipping back to the weekly, right? That would open up the door for lower prices. Yeah, I think we discussed in the past about 30. What was it? 35, 36. Sorry, not 36, 33, 34. Yeah, you get the point. It just potentially a move lower off if a retest of the trend line doesn't hold. And then noticing obviously that your 50 and your 20 are just kind of barreling down as well, but still quite a bit ways above. So remains to be seen, but clearly junk bond holders would be a bit nervous here. So finally, tips did manage to pop up quite strongly out of this kind of minor shelf support here and through 2015. Nice little gap up. And it is holding as temporary resistance, but the more significant long-term trend line, right? So here on the weekly, going back to way the heck back to mid-year 2013, holding for these price rallies is this now potential support line. Wasn't really much support or resistance, in through all this choppiness, craziness in 2015. So perhaps it will be similarly kind of disrespected here, or will it in fact turn into solid resistance into any potential price gains? If so, that along with any persistent weakness in junk bonds would not argue well for risk assets, and obviously the reverse is true. So yeah, that about does it for this week's episode. Sorry for the bit of junkiness around that junk review chart, but I think you get a pretty good sense of the picture. And again, that key takeaway this week would be not jumping into hasty conclusions. Just draw a parallel back here to our chop in the beginning of the year, right? So it would be easy to get emotional up here, thinking there's further highs kind of in and around here. Would we get up here? Nope, sell off. And then, oh my gosh, are we going to break below this low and this low? Nope, rally, right? And so you kind of get whipped around. And that's, yeah. So just being careful as to how we make decisions in these zones of support and zones of resistance. And then principle of polarity obviously applies when they break. Then what was support in the past, right, becomes resistance potentially. So keeping that in mind, guys, all right? Thanks for checking out the video. I hope you find this informative. Please subscribe to our channel, and we'll see you. Probably end up doing a weekend update. We'll find out, though. I'm actually out of town this weekend, so I'll probably have to hit you with the midweek update next week.